let's talk about savor the journey, because your other three values, very tactical, very logical. But then in all of this early days discussion and the amount of time that you all spent on this, you added in savor the journey. Talk to us about the importance of that and how you see that reflected in the company today.
Yeah, so that was the fourth one. We kind of run them in order. We always start with trust is everything. Details really matter. Own the outcome. Savor the journey. Savor the journey is the soft one, if you will. Like you said, the other are more tactical. But look, we're changing the world, and it's a very difficult mountain to climb to introduce a new financial product to consumers, and at the same time, a new asset class to institutional investors. So what we're doing is really hard to do.
Yes.
And you have to enjoy it. If you don't enjoy it, you know, it's going to be twice as hard. So savor the journey really is about enjoying what you do. And one of the things that we most enjoy is the satisfaction that we see in our customers.
This is the Smartest Person in the Room podcast. And honestly, it's not what you think. This isn't about ego or having all the answers. It's about intentionally putting ourselves in rooms where we're not the smartest ones there. So we're forced to ask better questions, listen harder, and stretch how we think.
So if you're building something, leading people, or just trying to get better, this is for you. Because we believe this: our humility is what makes us more powerful. And the fastest way to grow is to stop trying to be the smartest person in the room and start choosing better rooms.
All right, Jim. Today, you're the smartest person in the room, like it or not. When we're happy to have you on the podcast. We hope that we and our audience can learn from you and your experience. You just told us that you were part of a company. Were you the CEO of Unison?
I was the co-CEO.
Okay. And then you left to start your own company, or?
I left, well, it's just kind of a complicated thing. I was starting to disagree with the other co-CEO in certain ways. And it became obvious to me that the strategy that we were pursuing wasn't where I wanted it to go.
That creates a challenge.
So so I left, and I didn't know if I was going to start another business or not.
Okay.
I thought maybe I should just retire, but I can't do that. I'm physically not able to stop working. So I said, all right, I got to do something. And I looked around at other things to do, but I quickly realized that this industry is what I was best equipped to do, because there's very few people that have actually done it. And thinking, being a real estate guy, you're always looking for highest and best use. So the highest and best use for me was to be in this industry. I had the blueprints, if you will, when very few other people had that. So I decided to start another one of these, and looked around and found I needed a partner. I found a partner. His name is Ryan Kraft. And once I met him, and we realized that he was interested in getting into the business as well. And so we realized that we were the right partners for each other, and we launched Unlock.
Are you considering this the real estate industry or finance?
It's both. Yeah, I mean, it's real estate finance really is exactly.
And that's what Unison was?
Yes. Yeah, it was just pretty much the same business model, but the product had some different features. The capital market strategy was much different for the previous business versus this one. But the two businesses are more alike than they are disalike. But Unlock is we made a few things, or made a few tweaks, if you will, in Unlock that really created the opportunity to scale this that I thought was missing from the other business.
Awesome. And now you have the power to innovate and do the thing that you want to do. But I have a quick question. I want to go back to, you said you found a business partner. How do you find a business partner?
Yeah. So I knew a lot of people in business from my career, and I looked around, and I called a lot of people, and I was looking for specifically a capital markets person. I was involved in the capital markets side of the business at Unison, but that was not my side of the house, if you will. I was on the consumer side of the house. When you build one of these businesses, you have a capital markets side that sources the funds, and then you have a consumer side that builds a funnel and markets to consumers, and you're kind of sitting in between and connecting those. So I had the blueprints for this side of the business and needed the other side. So I called a bunch of people. I took a lot of meetings. I was introduced to Ryan by somebody that I know. And the premise for meeting Ryan had nothing to do with the business. This person did not know that I was looking for a person like Ryan. He introduced me to Ryan because Ryan had just founded a company called Salutigrade. And he said, you might want to invest in Salutigrade. It's a really cool business. I know he's raising money and all. So I sat down with Ryan. I think it was at a Starbucks on California Street in San Francisco. And we started talking. And he was telling me about Salutigrade, and as he was telling me, I'm thinking to myself, this is my capital markets guy right here, And
you're like, forget Salutigrade.
Yeah, so he starts telling me, I start telling him about what I've been doing, and he stops me and he says, I know who you are, and I know what you've been doing, and I want to be in the business that you're in, and I've already started incubating a competitor, and I need somebody to run it.
Wow.
So I said, well, there we go, right? So we started talking. We got to know each other a lot better, spent a lot of time together, and that was my partner. And just right around the time where we made the decision to work together and launch the company, COVID hit. It became a thing, literally like the same week. And we're like, wow, looks like the economy's going to shut down. Like, what are we going to do here, right?
Just for 14 days.
Yeah, 14 years, slow spread.
And we said, should we go forward with this? Is now the right time to start this business? And we said, the world isn't going to stop. If anything, this might, create opportunity. Who knows? So we said, let's go forward and do this. And we did. And, as a result, the business started out by necessity being fully remote because no one could go in the office or anything like that.
Yeah.
But I was able to put together my team very quickly because I had a large number of people that had worked for me at the previous business that had all gone on to other things for various reasons, some of them similar to the reasons why I left there. And I was, I called them and said, hey, I'm spinning up another one of these. We have unfinished business here. And everybody knew that. And they all joined. And so I had like a fully functioning management team pretty quickly, and not people that had to go through a learning curve phase because you can't hire people with experience in a startup industry. They don't exist. Yeah. You can hire people that have, tangential experience, like, real estate people or mortgage people. They're going to have some of the skill sets, but they don't have direct experience with this business. But my guys did. Yeah. So when we came in, like we had a full team, and it was our second rodeo, and you can move a lot faster and hopefully make fewer mistakes on the second rodeo.
Well, you had to be a good leader if people followed you.
Yeah.
Yeah, they're crazy enough to follow me. Go figure. But pretty much all of them did. A couple of them took a little while, a little bit of convincing and some arm twisting because, people don't want to just disappear from what they're doing.
Yeah.
But
it's a big decision.
Yeah. But eventually I got pretty much everybody that I wanted to get. They all came over.
I know what that's like. Yeah. When my husband leaves, he's been in his industry for over 20 years. And when he leaves and goes somewhere else, all of his buddies are calling him saying, how is it over there? So I could see that maybe that's how that happened.
Yeah.
What, we looked into your model a little bit more and we work with a client who has a similar, like you said, the capital side and then the consumer side. So we're familiar with that type of model, but I know it's really unique and it's pretty complex, right? For your average person to really kind of understand how that works. But obviously you had been in the industry before. You said that who you worked for before had the same model, but you enhanced it sounds like. And so, it's pretty innovative and it seems like a little bit more of a risk because it's not as straightforward.
A risk for who? For
you as the founder starting this thing.
Any startup is a risk.
Yeah.
You have to be
but you weren't afraid at all?
Slightly crazy.
Yes.
Yes, you do.
To do a startup.
Yes.
Especially in an area like finance, which is heavily regulated.
Yeah.
Yeah. So but that's the nature of the beast.
As a CEO of the previous company, you had the regulators maybe there, but the buck didn't stop with you, right? Because you weren't the founder. Now you're the founder. So you're taking a lot more of a risk, putting yourself out on the line. Was that scary? I mean, you said you had to be a little bit crazy, but it seems like you just kind of rolled right into it. Like, I know what I'm doing. I'm just going to.
Yeah, I mean, I left the other shop in the summer of 2019 and didn't know what I was going to do. Again, I thought maybe I would just retire. That seemed like a good idea for a month or so. But by the summer of 2020, we had launched the new business, and we were starting to construct things and get ready to.
So you just made the decision. You were like, let's go.
Yeah, once I met my partner, I had all the pieces that I needed. I knew I could get some of my team together, and that proved out to be the case. So that's what you need. You need a business plan. We already knew what that was going to be. I had the capital markets partner that I needed that was fully committed. I had the right people, and we had and we raised some capital pretty quickly to get things going. So we had all the ingredients we needed.
How many competitors do you have today?
There's like about 4 or 5 that are active, that are actually doing any kind of volume in the same space. Some of for the most part, the products are very similar to the one we have.
Okay, and so you've been around since mid 2020, and how has the business grown? Has it grown to your expectations, or has it grown slower than you wanted it to, or is it faster than out of control?
You always want it to go. You always want things better and faster if you can. We've been by far the fastest platform to scale, to reach real velocity. I mean, that's due to the fact that it was our second rodeo. These other platforms were started by smart people, but not with the requisite experience. So they kind of had to learn all the things that we had already, all the mistakes that we made, they had to make them. But we were the fastest platform to reach, for example, $1 billion in production by far, by like a matter of like several years less or faster than the other guys. And we really set the tone on the capital markets, which was interesting because we were the new kid on the block, and the competitors most of the competitors had been around for at least several years, if not 5 years before we were. But we were still the first company to get warehouse financing. We were the first to securitize the assets. We were the first to get the rated securitization. So we came in and we really blazed the path and opened up the capital markets. Unfortunately, when you do that, your competitors are right behind you, and they're taking advantage of, hey, the capital markets are open now. We can get our deals rated now, our securitizations. But that's just how you have to do it.
What do you call that in mountain biking?
What do you mean?
When someone's like riding in your
the draft.
Your draft.
They're in your draft. Yeah, that's exactly.
There's
a valuable spot there.
Yeah.
When you said you at the previous company had some different ideas, and then now you start your own company and you can try out those ideas. Did they all work? When you take a look back and you say, hey, I had some fundamental differences, and it's funny because the majority of founders, every founder we've ever talked to, it always starts with, there has to be a better way, or I see a better way. I fundamentally believe there is a better way. You experienced that in the previous company that you were the CEO of. Then you took that better way and deployed it into this company. Did the majority of those things work? Or are you like, most of them worked?
The majority of them worked really well. And it was pretty simple. I mean, it all comes down to 2 things that we needed to adjust. One was in the product structure, the actual mechanics of how the product works. And the other one was the capital markets approach. The previous business was not trying to create liquid capital markets for the industry. And that was, that's one way to do it, but you're basically not opening up the asset class, if you will. You're trying to find captive investors and keeping everybody else out. That's not you can't build an industry doing that, right? And you're never going to be. And it's useful to note that there's no such thing as a monopoly anywhere, and especially in financial services. Financial services is thousands and thousands of competitors, so you can't go into it with a mindset that I'm going to build this and no one else is going to be able to come in. That's not the way to bring the cost of capital down. You bring the cost of capital down by making it so that everybody can come in, creating a larger product, a larger asset class with more and more investors coming in, and that's how you bring the cost down.
Smart.
And so that's what we did there. And the product structure was, just a few things that needed to happen there to create a risk-adjusted type of return for the investors and enable us to serve the customers that really wanted to transact with us. I can go into a lot of detail on that.
Risk-adjusted. You said a risk-adjusted return for the investors.
Sure.
What does that mean?
Well, that means there's certain risks that are incumbent on a product like this. There's a mitigating factor there. So there's sort of a built-in return that protects investors in certain situations, that kind of thing. But it was the really important thing was to be able to serve the customer that I thought was the best place to launch a business like this. The previous company, the strategy set by the founder was to serve prime customers only. And that was by design. That's what he wanted to do. So automatically, if you're serving prime customers only, then you're going to define prime typically by a credit score and an income test.
You're going to narrow your market.
Yeah.
You're automatically competing with loans because by definition, if you're serving these prime customers and you're requiring income tests and credit scores, well, that's what the lenders do. So now you're going head to head with the mortgage loan products. And over the past 10 years, there's been various times where loans have been historically inexpensive, rates way down. So that's not the best place to start when you're bringing a new product to market, going head to head with that. And the nature of our product is it's an equity investment. It's not a loan. And so because you're not solving for a monthly payment, there is no monthly payment, you can tweak the product in a way that enables you to serve people that have lower credit scores and different types of income profiles. There could be you can serve retirees that are on fixed income that don't have a job any longer. You can serve people that have like gig workers that have the type of income that can't be documented properly to qualify for a loan. So there's like surprisingly millions of these people that are not served at all by the mortgage industry. They never have been served. So that was the first pool. So let's serve that pool because they have a need for funds, just like people that qualify for a loan do, and no one's serving them at all. The only way they can tap into the equity in their home is to sell the home, right? And that's not exactly the best way to do it. So we thought that's where we want to start. So we tweaked the product in a way that enabled us to serve that customer. And that was the right thing to do. And then, as we grew, we found out that lots of people that have higher credit scores and income also like the product because they don't have to make monthly payments. So we get a lot of those people as well, but we chose to start with that other population. And that made all the difference in the world between the prior company and this company.
Yeah. Oh, you had an advantage. You saw it right away because you saw how it was being done, and then you started to think, wait a minute.
We could see from running the other business where the more fertile ground was to operate. We could see it. We were talking to the people. We just couldn't transact with them because they didn't fit our guidelines. So we had
into it
let's create a product that we can adjust the guidelines for it, and then we'll be off to the races. And that's what we did.
Well, let's actually, I want to have you, if you would, explain the business in the simplest terms that you possibly can.
Sure.
What is the offering?
Okay. Let's see.
I said offering both sides.
Yeah.
Yeah. So we offer a form of home finance that's based on equity and not debt. Okay. We call it a home equity agreement. We provide a lump sum of cash to a homeowner. There's no interest rate. There's no monthly payments. The usual, trappings or mechanics of a loan are not really present. But there's an obligation, of course. In exchange for the cash, the homeowner will agree to share a portion of their home's value with us when the contract settles, which will happen when they sell their home or they want to buy us out. They can buy us out based on an appraised value, or that, they'll reach the end of the term. We have a 10-year term, in which case the settlement is required at that time. But it's a very simple product concept.
Yeah.
And we didn't invent equity financing, right? Equity financing lives in the economy in other places. Most notably, the stock market is a form of equity financing. And the stock market is bigger than the bond market. Like equity financing is really popular. And our product, when you look at home finance and you compare our product to mortgage loans, it's literally the difference between stocks and bonds. A mortgage loan has periodic payments, right? And so it's a loan. If you buy a bond for your retirement portfolio, you're buying a debt instrument, or, a loan product, and you're gonna make quarterly payments typically from a bond, right? There's income, just like with a mortgage loan, there's monthly payments. So and it's fixed income. You know what the payments are going to be. It's a fixed income type of an instrument. When you buy a stock, you're investing in the company. You have a tiny piece of ownership in the company. The company can go down in value or it can go up in value. You're hoping it goes up, right? Our product is we're basically investing in the home, and the home value can go up or down. We're hoping it goes up, right? But that's the difference between stocks and bonds and debt and equity. Right? So that's the basic idea of the product.
Awesome. One thing we're really excited about right now is the thought leadership engine we built at Inspired Vibe for founders and executive teams. The vast amount of knowledge you have about your industry deserves to be shared.
We help companies turn their expertise into podcasts with video content, LinkedIn strategy, and clear messaging that builds authority and drives pipeline. We ensure your voice is consistently reaching your intended audience, building trust with them early.
So instead of being the best kept secret in your industry,
You become the person people already believe before the first meeting even happens.
if you're ready to build your authority and create momentum around your brand,
Visit inspiredvibe.com or DM us to start your thought leadership engine.
for the investors, for the raising of capital, are they investing in a portfolio or are they investing in the individual homes or
Both.
how does that
Some
work?
investor, you can buy a portfolio of these contracts and you can hold them and just wait for them to kind of pay off. And you get returns on your investment as the homeowners move or buy you out or whatever they do.
So
But
you know which homes you're investing in?
we don't
know.
target specific homes. We put the product out there and the homeowners learn
Yeah.
about us and,
Do the investors have any choice or is
No,
it just, okay.
the investors are basically, investing in our strategy.
Yeah.
They're giving us capital commitments
And
and
your
then we go out
ability
and
to make smart decisions
Yeah.
on who you work with on the customer
yeah,
side.
but we have no targeting whatsoever of neighborhoods or zip codes or any of that stuff. When we enter into a state, for example, we make the product widely available in the state. We market typically through digital means and different types of media, and customers find us and we transact. We do underwrite them based on the home has to be in reasonably good condition, and we have to have a home that we can value with some reasonable certainty. And there are some other criteria, but it's easier to qualify than it is for a home loan product. But you asked earlier, like the investors, are they investing in portfolios of these things? Most investors will aggregate contracts, right? They'll buy the individual contracts from us. When they get enough of them put together, they will put them into a securitization vehicle and then sell bonds of different classes. And that's how that's how the strategy works. So you wind up selling credit enhanced bonds. I don't know if you know anything about securitization, but it's a way to it's a time-tested capital markets tool that accesses the largest investors in the world, because there's a huge appetite for institutional grade bonds or investment grade bonds, and if you can get them rated, which we now have, that the rating agency is looking at the risk, and they're assigning ratings to the bonds. We now sell A-rated bonds in the capital markets to very large players, and our investors, the ones who bought the contracts in the first place, are typically holding the subordinate pieces of the structure, and we're selling the seniors to insurance companies and asset managers and people like that.
Yeah, right there. Like that whole thing. There's so many complexities in what you do, and both on the homeowner and the investor side, have you heard people say, "Oh, hold on, this has got to be too good to be true"?
That's funny. It's funny you say that, because that is one of the things we've been hearing the whole time.
And so how have you handled that, right? Because we've seen this before with one of our clients, very innovative business model, great for the consumer, great for the investor. And when you hear about it for the first time, you're like, it sounds too good to be true. And so they deal with the same thing. How have you all handled that?
We hear that from the consumer side of the business.
I'm sure.
It's people, as soon as they find out that there's a way to tap home equity without making monthly payments, that's the first thing is, what is this thing?
What's the catch?
It's got to be, what's the catch? And it's too good to be true are the two phrases that you hear all the time. And it's like, there is no catch. It's an equity investment, and it works just like other equity investments that are already out there, like stocks, like I said earlier. So it's not some new thing that we cooked up that's based on some kind of trick or anything like that. It's just that's the difference. You just haven't seen it before, right? But if you think about it, you're already familiar with how it works, because have you ever bought a stock for your own portfolio? If you have, you kind of know how this works.
Yeah.
Right? Oh, I never thought about it that way. Okay, well, there it is, you know?
Where are you from? I hear an accent.
New York. Yonkers, New York.
Awesome.
And I can't get rid of that accent. I've been trying for years. It won't go away. It used to be
when did you
heavier,
move?
actually.
You said you live in San Francisco.
No, here, Arizona.
Okay.
This
but
is
you have a
home base here. For me. Yeah.
Yeah. But what brought you to Arizona?
Business opportunity some years ago. And through that business opportunity, I wound up actually getting introduced to this industry that I'm in now. So that worked out good.
Going back to what you said, it echoes one of your 4 values. Trust is everything. It sounds like that is just had to be a mantra in any conversation, any disclosure. Now we even know this is a big part with the regulatory bodies that are looking at you going, hey, wait, what is this? How does this work? You're raising money over here. I can see that just staying a primary driver of everything you do. How are we creating trust with this individual, whether it's a homeowner, an investor, a regulatory agency? But how do you, if you were going to speak to somebody who's in a very complex environment and hears this same thing from people, it sounds too good to be true, what's the biggest advice you would give them that you've learned from your experience with this? Because this isn't like this is what I think you should do. No, you all have done it.
You mean somebody in another industry that was running into the same type of comment from someone saying, So look, trust is everything is the first of our core values. We have 4 core values that we built in the summer of 2020. Myself and 2 other early joiners that were with me in the prior business, we spent way too much time on drafting these core values, but we really wanted to get it right. And it has turned out that we did get it right, because we still have the same 4 core values, and we've never tweaked even one word of the descriptions that are associated with each one of those values. So we're kind of proud of the fact that, every time we have any problem in the business, we look at those values and we're reminded of that these are the guideposts, and they still work. And so the 4 values are, like you mentioned, trust is everything is one, own the outcome, details really matter, and savor the journey. Those are the 4 values. But the trust one is the core. Like any financial business, if you don't have trust, you're not going to get customers. You're not going to get investors. And you have to trust each other as colleagues and all that. So the whole thing comes down to building trust. And my advice for somebody that's getting into a business and has a product that causes a reaction like, hey, this is too good to be true. You have to, I would encourage them to copy our value, trust is everything, and live it. Like you have to, it has to be ingrained in everything you do, all the decisions. When you're thinking about how to present your product to the world, you have to, if it's a product like that, you have to assume that people might be concerned or skeptical up
We're
front.
seeing a lot of this in AI development right now.
Sure. You have to assume that, it's gonna cause people to have concerns or questions, and you have to engineer everything that you do so that, it presents itself in a way that calms people and
Reinforces.
Yeah. And we do that. And this is one of the areas in the business where I have been particularly hands-on. Most CEOs do not go down to the level that I do. I actually am the drafts person for the educational materials that we use for homeowners. That's how important it is to me. I have been accused by my colleagues at times of they called me radically transparent. Too much education, too much this, and I'm like, no. If I'm going to run this, we're going to do this. If if you want to do it with less education, then I don't really want to be part of that. This is an important. It's an important decision for people to make. Their property is involved, right? It's sometimes the most important asset that the person owns. There are large sums of money involved. There are obligations involved. So it's very serious. And and it's brand new product that people have not seen before, even though it's, like I said earlier, people should be relatively familiar with debt versus equity. They still haven't seen a product like this in the home finance arena. And I can't tell you how much it costs. Just like when you buy a stock, I can't tell you how much money you're going to make on the stock because you don't know what's going to happen to the value of the company, right? So there's an unknown cost factor that makes it that much more of a concern for somebody to say, okay, I love the idea that I can get cash. I can avoid having to service any debt every month, but I don't know how much it's going to cost me. So how do I think about it? So we had to engineer tools that help people understand the various scenarios that can unfold in the future based on different assumptions for what's going to happen to the value of your home, when you might decide to settle the contract over the because you can settle whenever you want, but that has an impact on how much it costs. So you have to engineer things into to accompany that product that you're putting in the market that are simple for people to understand and create confidence and give them and put them in a position to make a rational decision and feel like they did it on an informed basis. And that's what we try to do.
That's really smart. If you hadn't done that, if you don't think that way and you just kind of like, hey, this product, it's good. People should want it. If they want it, we'll put it out there. If they want it, they'll come get it. If you hadn't gone above and beyond in the education piece, where do you think you'd be today?
Well, I wouldn't be involved in the business because I wouldn't want to do it. I think it creates a lot more risk for the business because a homeowner entering into a product like this without having received some education about it, who knows what's going to happen in the future when the obligation is due, right? You want to know that. And frankly, your investors want to know that too. One of the things that has created confidence in the investors to buy these assets is the fact that we do have mandatory education, that we do walk the homeowners through everything and we require them to sign off on their knowledge of what they're getting into in advance. And that was one of the things that I was able to use to get the rating agencies to be willing to rate the assets, was the fact that we had really good education and disclosures and all those things. And if you don't have those things, you're inviting regulatory issues, right?
Is that something that you brought from the previous company?
Well, I mean, the approach came from that. I was doing it the same thing over there too.
That was part of your leadership.
I was responsible for how we educated the homeowners and the materials that we use and all that. I mean, I didn't take any of that stuff, but the approach of being very education minded and disclosure minded, that survived from one company to the next.
How big is your company now at this point?
We have serviced about 22,000 homeowners now.
Wow.
Um,
Wow.
Yeah, we've invested a couple of $1 billion.
6 years. Jeez. Wow.
We have about 250 people in the company. So we're getting there.
Getting there. Yeah. Congratulations.
Spoken like a true founder.
I think it's
getting there.
Yeah, exactly. We're getting there. Exactly. How have you found is the most effective way to get those values to become a part of your company culture with 250 people?
Yeah, we train people, especially our salespeople. And that's probably the biggest out of the 250. We have probably more salespeople than anything else in the organization. They get a huge amount of training.
Are they in the same building, or
we have our headquarters here in Arizona, and we have another similarly sized facility in Troy, Michigan. That way, we have an East Coast time zone and a sort of West Coast time zone. But we train these folks for months before they're allowed to actually operate with real customers on the phone.
Months.
Yeah,
wow.
There's a lot of training.
That's an investment.
Yeah,
it's a lot of cost and time.
And
of your company
sometimes they don't work out, and you've trained them, and that's part of it.
Yeah.
But we want to make sure that by the time they actually get on the horn talking to people, they're capable of having detailed discussions about product mechanics and answering questions properly and all those things. So we make that investment in the people.
Do you tell people they're going to be on the horn? Is that? Is it in the job description?
I'm dating myself. It's really old-fashioned.
A little New Yorker there coming out of there
exactly.
too.
Especially nowadays that the horn is digital. The horn used to mean
exactly.
I think that comes from the ship actually, when they used to have the communications on the ship where there was no wires. It was literally like a pipe.
Yeah.
And they would yell into the horn, and they'd hear it down below in the ship.
We'll try to get our team to show some footage of that.
Maybe we'll edit that out of this podcast.
Jim, let's talk about...
Who is that guy? How old is he anyway?
Let's talk about savor the journey, because your other 3 values, very tactical, very logical, but then in all of this early days discussion and the amount of time that you all spent on this, you added in savor the journey. Talk to us about the importance of that and how you see that reflected in the company today.
Yeah, so that was the 4th one. We kind of run them in order. We always start with trust is everything. Details really matter. Own the outcome. Savor the journey. Savor the journey is the soft one, if you will. Like you said, the other are more tactical. But look, we're changing the world, and it's a very difficult mountain to climb to introduce a new financial product to consumers, and at the same time, a new asset class to institutional investors. So what we're doing is really hard to do.
Yes.
And you have to enjoy it. If you don't enjoy it, it's going to be twice as hard. So savor the journey really is about enjoying what you do. And one of the things that we most enjoy is the satisfaction that we see in our customers, the testimonials that we get. I mean, we literally have had homeowners cry on the phone when they get the phone call from, we call them home equity officers, HEOs. They get the phone call, hey, your deal's been approved. We're going to be able to fund you. We've had people break down and cry. This might be a person who has a need for funds, right? They have a problem they're trying to solve, and they've gone to lenders and gotten rejected, and they're like at their wit's end, and we're able to help them. And boy, does that make a difference in their life. And we see that. And then, so, we're like, it's not just a job, we're helping people. And our salespeople get positive feedback from that experience, and we do as well. We have all kinds of Slack channels, and we put these success stories up and things like that, and it feeds on itself. So you're not just going to a job and and spending the day doing whatever. Like the whole organization is built to help people, and that that's part of savoring the journey.
Yeah, that's so good. I keep thinking about how fast you've grown, and you have to have been able to boil down a couple of key things that founders and CEOs need to be focused on to be able to scale at that speed. What are those things that you would tell somebody? The things you absolutely have to be focused on?
I'm so not the right guy for that question. I'll
Is it
tell
your
you what.
partner?
Not the smartest.
Is that Ryan's question?
No, not
okay.
at all, not at all. Because most CEOs, I think, are very focused on strategy and like high level stuff, and they delegate everything else out. I'm like Mr. Hands-on, and I find it difficult sometimes to not be hands-on. I have, as we've scaled, I have delegated a ton of stuff, but I'm very much of a decision by committee type of manager. And again, that's like when you're trying to go fast, that's not always the most efficient way to make decisions, right? But I like getting the benefit of my executive team because they're all smarter than me. They should be sitting here. And once I have all of their feedback, then it becomes sort of evident. We all look around at each other and we kind of know where we need to go. Yeah. Once in a while, I have to sort of break a tie or make a command decision and say, we're going to do this. I know we're leaning there, but we need to go here. But by and large, the vast majority of our decisions are being made by the executive committee as a team. And here's where I think that works. At least it's worked for us. When you are scrappier and making your own decisions as a founder, a CEO, going faster, right? You might make more mistakes doing that, right? And so you're moving faster, but if you're making a mistake, you got to go backwards to fix the mistake. Yep. If you get the decisions right, if you make the decisions more slowly, but they turn out to be the right decisions, you just keep moving forward.
You improve your shots on goal percentage.
Over time, that winds up winning the race. Yeah. So I think that's what's worked good for us, is that we're more measured and thoughtful in how we do things, which means we enact change slower, but we never have to undo. I shouldn't say never. Of course, we all make bad decisions from time to time, but on average, I think that wins the game better than the other approach. So most CEOs would not. I don't think they would say that. They would say, "This is what I learned. I have to be visionary. I have to think about this." That's not my style.
Well, if that's true as to how you operate, then it works. The proof is
in the pudding. It works for us.
Yeah. The proof is in the pudding.
Yeah.
Well, I wanted to ask you. It sounds like first of all, you said you surrounded yourself with really good executives. Do you have any advice on how to find those people?
Yeah, it's really, well, first of all, a few of them were my team, my previous team. So those were no-brainers. I mean,
But you built relationships with those people while you were their CEO.
Oh yeah. The fact that they came and did this again with me, that was because we had a strong bond. We used to look each other in the eye and know there's a better way to do this. There's a better way to do this. And we knew that. But those were tried and true, and I knew their skills, and there was a high level of trust with those individuals. Yeah. It was not even a thought. If these guys are joining, I'm taking them, right? So those were easy. And I've hired a lot of other people since then that I didn't know. And hiring is one place it's very, very hard to get it right.
Yeah.
You can, and it's really expensive when you get it wrong. And I've made a few mistakes. I've hired a few people and realized 6 months into it, this was the wrong hire. Even though we interviewed God knows how many people, we were all convinced that this was the right thing. No, it didn't work out. So it's so expensive when that happens. You have to be very, very careful on hiring. So one of the ways to do that is to have a really good HR department. A lot of executives think, it's going to be on me to go find these people. But if you have a really good HR function, or people ops as we call it now, I'm dating myself again. No one calls it HR anymore. Anyway.
Some people do. It's okay.
People ops, yeah. So I here's how I got my people ops, the head of my people ops, and she's awesome. And I found her here in Arizona. There's a fintech business based here in Arizona. I won't say what, but I was looking on LinkedIn, and I found her, and I found out that she had just left that business. And I'm like, she's going to have the right skills for this, and she had been there when they went public. So I was like, okay, this person probably know. And I got in touch with her. She was working at a temporary thing up in Seattle. I flew up the next day. She's like, who is this guy? He's coming up here, coming up to Seattle to find me. I had a feeling about her, and we hit it off. And I just knew that she had the right stuff for what I was looking for. And we spent a few weeks getting to know each other. She was already living here, hired her. She built a team of recruiting capability and onboarding that's, like best in class. And so when I need people and when the org needs people, we get them on the case. And we hardly ever even need to use search firms because we have it in-house and it's so good, our ability to do it. And, you make fewer mistakes when you're hiring, when you have that capability. So, but you have to be, I can't emphasize that enough, especially for senior people. If you get the wrong person and you have to undo it, you've wasted like enormous amounts of time. And especially in an industry like this where there aren't people that have the exact skill set. They have to go through a learning curve. So you have to wait till they get through the learning curve to find out if they're actually going to be the right person or not. And then if they're not, it's like, oh boy, you got to start over and do another learning curve. Meanwhile, the role is unfilled. So it's tough.
How important is it? I mean, we have our answer to this, but I want to hear yours. How important is it to have the right people in place at the leadership level?
Oh, it's the most important
impact
thing. If you don't have that, you're going to be in real trouble. So you have to put that team together. That team has to be, and it can't just be a bunch of individual performers. If there's no cross functionality there, if there's no trust between the team members, like this goes back to the decision by committee approach that I have. Our executive team are talking to each other all the time. There is no competition. They're like, sometimes organizations have competition where the senior executives are trying to get into favor with the CEO at the expense of colleagues. That stuff is absolutely poison. You can't have it. So our people love each other. We become friends doing this, and like that's the best way to do it. You're firing on all cylinders when you have that, and when you don't have that, you're impaired.
Love it.
Yeah, we definitely, our team of directors, we talk all the time about, first off, we've got the team now. We went through some of the missteps and some of the misfires along the way, but we have the team now. And now mine and her focus is how do we continue to, us two, with that team of 4 directors, start to operate like a unit, tighter and more refined, almost like a no-look basketball team, right? No-look pass basketball team, really focusing on things like that. And so our directors, they call it 9:30 at night, we answer the phone. Like that's the level of connection that we have to them. And also just getting them to learn how to work with us has been a road in and of itself, right? I think there's a lot of executives, CEOs that don't want pushback, not pushback, but that I don't know if I necessarily see it that way, kind of conversation that refining fire that needs to happen between the leadership and the executive team. But once that happens and that feedback loop is open and solid and built on trust and respect, it's pure fire what can happen.
Yeah. And we debate. I mean, we flat out yell at each other sometimes. Like, and no one's afraid to do that.
Yeah.
Right. Like people feel comfortable that they can do that and they can show the passion, and that's fine. I get told off all the time, by my top guys. And then I'm like, okay, if they really feel that much passion about that, maybe they're right. So let's take a look at it. And we do that all the time. But one thing we do, and this is in our Own the Outcome value, part of the Own the Outcome, each one of our values has like a little description of it, right? Well, one of the things we say, we debate, passionately, but when we arrive at a decision, everyone supports it with a contented heart. So that means that, like not everybody will agree with the final decision or something, but they will support it and they won't like look back and say, oh, I told you we shouldn't have done it that way, or I'm not really going to support this. Like we don't operate that way. Like once we're in, we're going to do it. We're going to give it our best try to make that work.
That's important. What's the Jeff Bezos story?
Disagree, but commit. Disagree, but commit.
There you go.
Like I'm not here on this vote, but this is where we're going. I'm fully committed. You have my full support. Your executives did not start out that way, talking to you that way. So what did you do as a leader to unlock that comfort in them to be able to have that kind of communication and relationship with you? Because most environments, that's not That's not the way the executive team that's not the way the CEO wants the executive team. So how did you bring that out of them, nurture that out of them? Or what environment did you create for them?
So for our our story is going to be different than others. But for me, the way that worked was I started out with 2 people that were from the other business first. So there were 3 of us. And we spent the first 5-6 months basically laying the groundwork to get the business off the ground. And we were literally it was COVID, so we could not be in the same physical space. But we were on the phone with each other 12 hours a day, including the weekends. We just kept going. And when you're in constant communication with somebody at that level, like you just develop that ability to just finish their sentences, talk over them, yell at them, whatever. And so that happened. And I had known both of those guys for quite some time already. So there was a history. Once that core group was in place, the 3 of us, as other people joined, they might have been people that we already knew, so they would just plug right in. And once you it's like anything else. If you walk into a room and there's a bunch of people that are acting a certain way, you automatically kind of feel like, okay, I can act that way too.
Yeah.
So that's how we acted. Like when we have our exco meetings, new joiners, like my HR person, their HR, people ops, she's going to kill me. My people ops person. And my general counsel, for example, they arrived and into the boat, and they see, okay, this is how these guys operate in this boat. Okay, welcome in. This is how we talk. It's all cool. This is how you can be. So it doesn't really take much to get the new joiners to get the culture, because they're just watching how we do it.
Yeah,
and they can jump right in.
I love it.
I'm not bringing in people that are going to be the type of people that are not afraid to that are afraid to speak their mind.
Yeah.
Like the new joiners that I brought in are the type of people, they're A personalities, and they're going to get in there and they're going to tell you what they think. That's what we want. We don't want any pushovers in the senior management role. That's the last thing you want.
Yeah, definitely.
Yeah.
And we were talking about this morning. I think people aren't really used to that. So maybe they do have that personality, but they're not used to being able to do that with their CEO. But like you said, they walk in the room and they go, oh, I see how this is now. I'm not
a CEO. I'm just a guy who works here.
I love that.
We're all just guys that work here, or gals that work here. Like, this, what titles, who cares? We're just trying to solve problems,
That's amazing. So Jim, who would you have considered a mentor to you along your journee?
There is probably the best mentor
There's always
I had.
one, right? I love that there is always one.
Yeah, there's one that sticks out way above anyone else. His name is Mike Berman. He was a CEO of Nomura, New York, huge global investment bank, Japanese behemoth. They have a New York business, and he was the CEO of that. But the way that all happened shows like a little bit more of the background of my life. I grew up as a musician, and my father was a professional musician. My father played with people like Frank Sinatra, Tony Bennett, Dean Martin, Sammy Davis, Barbra Streisand.
Were you like a little kid, in the room with these
No,
things?
no, not there. But my father was out playing all these gigs with all these famous people all the time. Wow. And so we grew up in music, and I became a musician when I was younger, and I played around bands and I did all that stuff. Anyway, I met a lot of musicians along the way, and one of my musician friends introduced me to Mike because Mike was a musician when he was young, and my friend and Mike had played in a band together. So he said, you're kind of, at that point in time, I was turning away from music and going into computers and finance and things like that. So my friend saw that and he said, I got to introduce you to my friend Mike. He's a great guitar player, but your path is moving towards where his path went, and he rose to like a very senior level in business. So he introduced me to this guy, and we just hit it off. I think he saw a lot of himself in me. He's about 10 years older than me.
Okay.
And he helped me out enormously with advice, opportunities. He's the one that got me involved in this industry, right? So he's been a fabulous mentor, and I can't thank him enough. So, yeah.
Can you remember, one of the best pieces of advice he gave you, or what's, Number one thing you learned
Well,
from him?
the biggest thing, the biggest thing I think was he believed in me. You know, he put me into situations that a little bit like where I was a little bit over my head. But, you know, and I'd say, Mike, you want me to do this job? I don't really know how to do this job. Yes, you do. You can do this job. You know how I know? Because I see you do other things and I see how you approach things and I know how you think. You're not far away from being able to do that job. You just need to just do it for a little bit.
Wow.
And you know, and after a while I started to believe that. And once you believe that, that creates a flywheel out. You can keep going, let me learn something new. Let me learn something else new.
yeah.
I can do this.
I haven't
That
done it
was
before,
the
but I
single
can-
biggest thing that he did that really helped me. I don't know if I have no idea how my life would have turned out if I hadn't met him. Would have been probably very different.
Definitely. I mean, we started this whole interview with me asking you, what does it take, honestly, to start something that's kind of complex and not everybody understands? Some people think it's too good to be true, you know, and so that seems to track with
You know,
how he.
entrepreneurs, you know, you have to be a little bit crazy. You know, a lot of people don't have the stomach for that. You know, you want to get a nice secure job, feel like you got stability and all that. We're a little bit more on the tightrope without a net, but that's just how it is, you know.
Yeah.
But you know, if you want to
At
change,
least I can pull her down with me.
Yeah.
I'm not going down by
Yeah.
myself.
Oh yeah, we'll be together.
you have to, you know, you really have to just be willing to take risks and live that way. But if you want to change the world, there is no other way. By definition, anything you're going to do that's going to change the world, it hasn't been done before. So there's no net. You have to just go out because you might fail spectacularly. Can't do it, right? But you have to be prepared for that.
Yeah. I think
That
a
was
big
so
thing,
good.
that was so good. I think a big thing too, we've experienced in that tightrope walk, being founders, is learning how to manage the stress of it all. Because as you start out, you go, oh, well, as long as we make X amount, right? You have these lofty goals as an initial founder, a young founder. And then you hit the goal and you go, okay, well, yeah, I made the goal, but now there's a different series or set of circumstances that are equally, if not more so stressful, because typically the numbers get bigger. You may have to leverage higher, you know, at some points, which is then the tightrope gets higher and higher from the ground.
Yeah.
And how have you managed the stress? Because you don't make it at this level, staying clear-minded, grounded, obviously staying in connection with your friends and family and the other priorities of life outside of work. How have you been able to manage the stress?
It's a really good question. I think I have a pretty high level of stress. I think
As far as your capacity for it?
Yeah, I think I do have a high level of capacity to handle it because sometimes it's unending.
Yeah.
You know, it's you're constantly, as you said, sometimes people think, well, as the business grows, it gets easier. It actually gets harder.
It does.
Some of the core stuff is built already, but when the scale creates as you put it very well, the bigger you get, the higher the tightrope is off the ground, and there's still no net there. You know, especially in a business like this, you've got a pipeline of homeowners that you're talking to, right? That are at various stages of the process of becoming a customer, right? And actually getting funding from us. And they might be in that pipeline for 10 days or sometimes several months, depending on how long it takes to get them from the beginning to the end. There's different paths for different people. And you've got to have the money when they get to the end. You got to have the money, right? Those two things are like, if the capital markets go through shocks from time to time, like COVID was a huge shock, right? Like when wars start, things like that, there are shocks and money disappears or dries up, credit dries up, and you've got thousands of people that are counting on you to fund. So the bigger the business get, the bigger that pipeline is, the bigger the risk is there. So it's pretty stressful.
Yeah.
You know,
How do you manage it? He's like, can I just talk about how stressful it is for a minute?
I just deal with it. You know, I don't really have a good answer. It's not like I don't meditate or do something like that. I just keep going.
Yeah.
You know?
Sorry.
Yeah.
I'm not trying to knock meditating, but that alone would not be able to.
I just keep going. I stay focused on the mission. you know, and I think, you know, you just keep going and you stay preoccupied with it,
Yeah.
and you forget about the stress. You know, it's
Do you
there.
get a good night's sleep at least?
Yeah, sometimes.
Okay.
You know,
Okay.
I think that's definitely one
So he's
thing.
not going to give us a secret
No,
for managing stress.
but it does make
I don't
me
think I have one to give you. Sorry.
It does make me think, though. Her and I were talking recently about one thing that her and I do is when things get uncertain or uncomfortable, we take action. And so we meet that uncertainty with action. And I think that's a trait amongst founders, executives, that when things get uncertain, a lot of people's response is to pull back and evaluate and sit and watch. And I think most founders spring into action to meet the moment. And so that's what you said as far as like managing the day-to-day stress is there's, you know, we're problem solvers. That's what we do at this level is we solve problems. And I think as you get further into your career, you learn how to solve those problems more efficiently and better. But at the end of the day, it's always about taking action. That's our response to the uncertainties or the risk that we may now be facing. We don't sit around and we think about it.
Yeah. All right. So you're prompting some thoughts now for me.
Okay.
So I wouldn't call this a secret, but when something happens, the fact that I know that I have my executive committee to fall back on to help figure out how to solve the problem, that is a stress reducer, right? Because it's not like I got to figure this out on my own. We don't do things that way, right?
good, yeah.
We all know that we can count on each other.
Yeah.
So that's a big
Not
thing.
just on your shoulders.
Yeah, exactly. And we actually, we don't immediately spring into action on things because sometimes unless it depends what it calls for. Like if you have certain emergencies, you have to do something right away. But sometimes we'll say, oh, let's think about this before we do something and make sure we get the right response. Sometimes the knee-jerk response is the wrong one, right? And one other thing that I've told my team many times, when a problem comes along, when it first lands on you, I always say, you know what? At some point in the future, maybe it might be a short time, might be a long time, we're going to be able to look back on this and realize that it was nowhere near as bad as we thought it was when it landed on us because it got solved. So it always feels like this is the worst possible thing ever. Like it's not. Like there's almost always a solution. You just don't know what it is yet. And later on you'll realize that wasn't really as bad as we thought it was at the time. It just feels like it's bad at the time. So that kind of helps too. And I think that our team looks at things that way as well.
Well, I'm going to hit you with our final question. So how do you get into rooms with people smarter than you? Or how do you keep yourself fresh? I mean, we're always learning, right? And as entrepreneurs, I feel like we'll never stop learning. So how do you keep yourself fresh and get into rooms where people are smarter than you?
We go to a lot of events where, senior people mingle. You meet a lot of people that way. So we have networks of people like that. You hire people that are smarter than you all the time. I mean, I've been fortunate enough to be able to do that. I don't spend a ton of time like thinking when I wake up in the morning, say I got to find somebody new that's smarter than me today. But you come along them all the time, and when you find someone like that you've got like a rapport with, or and that you're gonna try to stay in touch with that person, and debrief each other from time to time. So I mean, business school is another place like your school, right? That's a really great place to meet people that are really smart, and to kind of like nurture those relationships over your life and keep some of those. So I was fortunate enough to go to some really good schools and meet people there. But yeah, I mean,
you just kind of keep your eyes open.
Yeah.
Awesome.
And look, I know the name of the show here, but I'm definitely not the smartest person in the room, but I am perhaps the person that has the most perseverance in the room, and that usually is more important.
You must be known as And what are you known as? I mean, I from what you've said, it seems like you're known to be an extremely hard worker.
Yeah.
You've always got your sleeves rolled up.
Everybody says that, you sent me emails last night at 3:00 in the morning. What are you doing? And I routinely talk to some of my guys at like 12 midnight on Saturday. We'll call each other but yeah.
Some of your executive team?
Oh yeah.
That's cool.
Yeah.
Those people are very invested.
I have, there's one guy that I talk to a lot, and I refer to him as Kevin from what's the insurance company? Kevin from State Farm, because my wife, it's like my wife is like, "Who are you talking to?" It's Kevin from State Farm.
Oh, that's hilarious! Awesome. Well, congratulations on your success, and we're humbled and honored that you'd come and sit with us today.
Yeah.
And I got a lot of good nuggets.
I did
out of
too.
there.
Yeah.
You two are awesome. I really appreciate you asking me to do this. And so it's been fun.
Thank you.
Yeah.
Thank you.
If you're the smartest person in the room, you're in the wrong room. Here, we're choosing the opposite on purpose. Every conversation is a chance to sit with someone who's ahead of us in some way and to let their experience stretch ours.
If something in this episode made you think a little differently, that's the whole point. Keep finding rooms that challenge you. Keep asking the uncomfortable questions. Our humility is what makes us more powerful. And the fastest way to grow is to put yourself in rooms where you're not the smartest one in them.
Thanks for listening to the Smartest Person in the Room podcast. If you're someone who's building, leading, or just trying to get better, we're glad you're here. We'll see you in the next room.